What is short selling? What's a short? Is it a short thing? Is it a short dwarf? Is it a small little guy? A lot of people will struggle to get their head around it if they've just so that you understand the difference between long, short, as we call it. It's been a really, why would we go the other way? So you have to get out of the trade at some time. This is not an investment. For those of you who don't know me, I'm Rob, and for those of you who do know me, welcome back. Let's talk a little bit about short selling today, because not everybody out there knows what short selling actually is. The big thing about short selling is we're used to being in a market where things tend to go up, where we invest in a stock and it stays there, and when it gets to a certain level, that's when you sell it. And that's when you make your profit. And now what I'm telling you is that you can sell a stock before you even own it. And that's questionable. You're going to say, but how can I sell something that I don't even own? How that works is effectively you borrow the share from the broker so that you can sell it. And I know it sounds strange and it sounds odd, but that's how markets are made. Markets are made by the fact that there are buyers and there are sellers in the market. So it's understandable to think, well, maybe, perhaps, if there's a seller in the market, there's a buyer in the market. So what they've done is they've designed a situation where you can now be the seller. You can sell the share and someone else will buy it and own it. So you're betting that the market's going to go the opposite way, to the downside. And what short selling allows you is the ability to sell the market down. So you can make a profit when the markets are bearish. But you can only do this with gear trading, futures, contracts for difference, and that sort of thing. You can't do it with normal equity. That doesn't work. I'm going to take you to the charts, and I'm going to show you on the charts how this works and how the best way to go about it is. And I'm also going to show you after the charts the best way that you can become profitable in the stock market and a little business plan that will help you with your strategy, with your trading, so that you can make money in the markets. Before you can make money in the markets though, you really do have to understand how short selling works. Now, if you're an investor and you're just going to put money into equity, then forget about short selling. You're never going to short sell. You're always just going to buy, invest, and wait for something to come out on the other end somewhere down the line. It's time in the market, not timing the market. The basis of the stock market itself with equity is for it to go up and to keep on going up. If you look at the S&P or the US 500 over the last 99 years, it's just been going up. It's had a couple of corrections, yes, that's true, but it keeps on going up. The big question is, what is long and what is short? Now, what's a short? What's a short? Is it a short thing? Is it a short dwarf? Is it a small little guy? Oh, did I say that? But what a short is when the market's going down. When the market's short or bearish, it's going down. We call it a bearish market. And when we're taking a short, it means we're trading downwards. And you'll say, well, why don't you just use the normal terminology? We're trading it down. Well, it's just easier and terminology to say short. Don't play too much into big words, but it is important to understand bulls and bears in the stock market. What is a long? A long is when the market is going up, when you're trading up. And a bull is when the market is bullish. It means it's strong, it's going up. Bull, the bull's strong. Bear, okay. So just so that you understand the difference between long and short. Now, the default feeling in the human psyche is to go long because you're so used to investing, you're so used to buying things. And the psychology of it is you believe that everything you do should be a long trade. Really, why would we go the other way? Well, if markets are bearish, then clearly it's an obvious choice to take a short trade. You can profit from a bearish market. In other words, when the markets are bearish, and I'm going to use the word quite often so that you can get it into your head if you don't know it already. When the market's bearish, you don't have to sit back and get out of the market. You can literally trade with the market. The danger of trading short, though, is obviously that the markets are default long. They generally tend to go long. They generally tend to go up, which is why many people have got into trading Forex, because Forex tends to go up and down. It tends to move around. It doesn't tend to stay in one direction forever. That said, many of the commodities as well tend to stay within a range. So it's a bit like range trading. And if you look at my previous videos, you'll see how I've mentioned range trading, trading in a range. We trade three ways. We trade with trend, we trade with range, and we counter trend. It's price action. And if you're trading Forex, you're effectively trading in a giant range at the end of the day. While they are sometimes trending and you sometimes counter trading Forex, at the end of the day, it tends to stay in a giant range. It doesn't just keep on going for 90 years like the US 500. It tends to go short and it tends to go long. And which is why short trading has become a very popular thing, particularly in currencies, because in currencies, it's an easy way to trade. But I tell you what, guys, we're going to go and have a look at the charts, and I'm just going to show you a price action system on the charts that will help you with your trading, so that it'll help you to get ahead with your trading, and it'll give you an idea of how to trade price action. And I'll show you on there how you can take a short trade and what a short trade is actually all about. But before we go there, guys, do remember that trading is risky. 80% of traders do lose money. And if you don't like risk and you don't like losing money, you probably shouldn't be trading and you probably shouldn't be getting into this game. Rather stay with something else or just invest in the stock market. That'll probably be easier for you if you don't like risk. In fact, on the lower time frames, such as 5-minute, 1-minute time frames, the scalpers, that sort of thing, it's been proven over and over again that 99% of traders actually lose money. And that is quite a scary statistic. The fact that 70 to 80% lose money under normal position and swing trading is bad enough on its own. But guys, while you're here, drop down to the description. I've got a free Forex book for you there. Download it. It's totally free. Enjoy it. If you want a trade of the day, then you have to be a member of this channel. The membership you join below the video. I put a video out every day, and I go over the markets for the guys in the morning on South African time, because that's where I am. Guys, let's go and have a look at the charts. I'll show you a system. After the charts, I'll talk to you about the business plan behind price action and behind how you make the money. Because as I've told everybody over and over again, you don't make money on the system or the squiggly lines. You make money with how you approach the markets, with your business plan, with your market plan. Really, that's the way to make money. Let's look at the charts, guys. Let's talk about short selling. A lot of people will struggle to get their head around it if they've never traded before and you don't know what trading is, because how can you sell something before you buy it? And that's always the complicated issue. Normally, when you get into a market, you see a chart like this, couple of green bars, and you want to buy it and you want to go long, because that's the general idea in the market, is we take long trades. But sometimes we take short trades. And why do we do that? Well, in the markets, what you get, and if you want to see how to draw these support and resistance lines in, then please go to my previous videos and go and have a look, where I go into detail on how we trade support and resistance and how we draw the lines in. But all I'm going to talk about today is the actual short selling on price action. If you look at this scenario, this particular is the euro, US dollar, and it took a big hit. It's been going short, as we call it. It's been a bearish market all the way up here. Now, the nice thing about markets like these is you've got a resistance at the top and you've got a support at the bottom. What is a resistance? It's a place where the price kind of hits and runs out of steam every single time and comes back. It can't get through that level because there's a whole lot of sellers sitting in that area. There's a whole lot of orders sitting in that area. So there's a whole lot of money waiting in that area to sell the market down. Or people that are taking profit, taking their money, getting out of the trade, whatever the case. Your opportunity to make money here is to sell down with this particular move. Now, when the red bar comes out of the resistance and it closes, and this is a 4-hour chart, we trade on the 4-hour charts and we take our levels from the day chart. But when a red bar comes out of the resistance, you can now sell it short. In other words, you can take a sell order on this particular product against all the other buyers, and then as it goes down and it'll go into profit for you instead of it going into a loss. So in other words, the distance that this moves down, just like if you were long and it was going up, the distance that this moves down, that's your profit in the market. You'll be making a profit. The lower it goes, the more you make a profit. See these big red bars here? they tend to make you a profit. Now, my warning to you on short trades and long trades is the short trades tend to move a lot faster than the long trades. So it always seems to battle its way up and fall down hard, particularly on the indexes, although this index did kind of fly straight up. But you get these moves and then you get this short move down, and you can take that, make a profit, but just remember the default on an index is to the upside. So you have to get out of the trade at some time. This is not an investment. You can't sit short on something forever. Short trades are also short term. Use the word short a lot, whereas long trades can be long term. They can take longer to play out. For example, if you take a long trade here and you hold it and it comes back, it'll most probably one day come back and give you the money back in any event if you've got enough money to hold it forever. Now, this is a bullish trend. Do you want to go short on it? No, not really. Your best bet is to wait for it to come down to the support level and take a long trade. What you're looking for is something that's in a bearish trend that hasn't broken structure. For example, this Euro US dollar is a good example of that, where it's been in this long-term bearish trend. Now it's tried to come back. It's still in the bearish trend. I would recommend staying short on it. Comes back up here. It's the old, what was a support level and is now resistance, and carries on going short. That's what you're looking at. Look at this. When you turn around, for example, this has been short all the way down in structure. It stays in structure. You keep taking short trades all the way down in the structure, same way you would buy it long. But now it breaks structure and it starts to go long. Now you have to be careful. Do I go short or do I go long on this product? At this point, you would be going long, but there is a double top sitting here, and that would tell you you might want to call it short again and carry on selling it downwards, because it's in a long downward trend. And the opportunity that you have in these markets is to be able to sell short and make a profit from these downward moves. You know, particularly when a market gets to its top, like the US 500, and you think, well, I can't buy this anymore, because how much further can it go? Well, it can go quite far, to be quite honest with you. But if you just feel like, listen, this guy's really run hard, it's had enough, I don't think it's going to go much further than this. If you see it break structure and you want to counter trade it, you can now trade it short if you want to, if you believe it's going to go the other way. In many cases, you get these ranges. For example, on the FTSE, it stays within this range. It's always in this range. So when it hits the top of the range, you sell it short. It's the bottom of the range, you buy it long. All you do is you wait for the red bar to come out, buy it short. You wait for the green bar to come out, buy it long. And we keep it simple. We do not get overcomplicated with any of our trades. So now you've seen the charts. Now you know how to trade with price action, and you have an idea how to trade with price action. And if those charts don't help you, and if there's not enough information in there, then pop back to my previous videos and have a look there, because there's plenty of other videos that I've put out with lots and lots and lots of information in there, where I go over this procedure over and over again, trying to explain to you guys how you can make a profit in the stock market, how you can actually trade with price action with no indicators without getting confused. You don't need the stars to align with the moon and the sun to be behind the moon and that sort of thing before you take a trade. It's quite easy, really. You just do it simply. Keep it simple. Don't get complicated. But how do I make a profit in the stock market? What's the best way for me to make a profit in the stock market, or trading Forex or futures or commodities or whatever the case? A lot of people have asked me, Rob, what do you trade, or what time do you trade? Guys, I trade everything, and I even have investments. So I've been in the market for 30 years. I'm not here to play around with one particular item. I use everything that's at my disposal if I can. The way to trade is to manage your risk. In other words, you take the size of your account and you risk 1% per trade of that account. Let's say you've got a $100,000 account, and I'm just using it as a round figure. That means you can trade $1,000 per trade, because it's geared trading. Remember this, it's geared trading. And if you're going short, it can only be geared trading. So you take a $1,000 risk on each and every trade, and you keep the risk the same on every single trade. You don't change it. You never change the risk. You never move the stop loss away when it's losing. If it's losing, you take the stop loss and you get out, because the stop loss, you need to place it in invalidation period. How do you determine the stop loss? You go and you have a look at where you feel, if the price gets to that level, my trade will be completely invalid. It will no longer be a valid trade. I'm going to walk away from that trade if it gets to that point. Then you work out how much $1,000 will be to your cost price, and then you work out how you can make a 2-to-1 profit. In other words, or a 1.5. Make much more profit than the $1,000. Try and make $2,000. Then if it goes into profit, this is the second part of the business plan. You don't need to write this down. If it goes into profit and it's $500 or $1,000 in profit, move your stop loss up to cost, and suddenly your trade is completely free. You're not paying $1,000 for it anymore. Now it's completely free. It's all yours now. Now you can enjoy the trade. When it goes further into profit, you move your stop loss up a bit more. And when it starts to reach a target, you move your stop loss up right behind the target. You don't take the profit. And if it comes back and takes it out, you get your target. And if it doesn't come back and take it out, you make more profit. Really easy, eh? Not that difficult. It's immensely difficult because you have to get your psychology around it. You have to get your psychology around fear, because those fear receptors in your mind are going to make you want to take that profit. Those fear receptors in your mind are going to want to make you average down your losses, which you don't want to do. If you go into a loss, you got to walk away, guys, and let it take out your stop loss. If it goes into a profit and it's $300, $400, $500 in profit and you've got a $2,000 target, don't take your profit and run. Leave your profit to run. Move your stop loss up to cost if it makes you feel more comfortable, because that way you've got nothing to lose. You haven't lost anything yet. So many guys say to me, but I was $1,000 in profit. It came back and took my stop loss out at break even. I lost $1,000. How could you? You haven't traded out of the trade. When people go into a loss, they're quite happy to move their stop loss further away and take a bigger loss and average it down. Aren't you losing then? Isn't that when you're losing? No, because you're still in the trade. So you're trying to stay in the trade so that you don't lose anything. But funnily enough, when you're in a profit and that comes back and takes out your stop loss, then suddenly you feel like you've lost money. That's the psychology behind it, guys. You haven't lost anything because you haven't won anything. You haven't closed the trade. The trade is still open. So remember, when you're in profit, don't dive in and just jump in and grab the profit, because what you were aiming for are those big wins. You're aiming for the long ones. You were aiming for that trade that's going to make you a gargantuan win. So many times you get these gargantuan losses. Why shouldn't you get the gargantuan wins as well? That's because we hold on to our losses and we don't hold on to our wins. What's wrong with us? Exactly. Psychology. That's what makes it so difficult to trade in the stock market. So switch your mindset around. Hold on to your wins. Let go of your losses. Drop the losses as soon as you possibly can. See yourself going to a loss and you see it looks invalid. Get out. Dump the trade. Run. But when it goes into a profit, hold on tight. Because that's where the money is, guys. That's where the money is at the end of the day. But I hope I taught you a little bit about short trading, and I hope you understand what short trading is. If you're not sure, feel free to join me on the live shows. We've got another one tomorrow in the Euro session, another one on Thursday again for the USA session. Every Tuesday and Thursday I hold a live show so that you guys can chat to me on the chat and I can answer the questions and that sort of thing. So if you've got any questions on short trading, feel free to come to the live show and ask the questions. You can also comment, but sometimes really difficult for me to answer in the comments because the answers are just so long and then I have to sit and type them out. That's crazy. I can't sit and do that. There is a lot of comments as well. So I'll do my best, but normally I'll say to you, drop into the live show. Let me answer your question properly. Guys, thank you for watching the video. I hope it helps you. I hope your trading goes well. Till the next one, cheers, thanks, and bye.